Well, hello everyone. Hope you're doing well today. Welcome to Investor Tips. I'd like to talk a little bit about some of the things that investors really care the most about. And from time to time I'll bring up different points and try to express at least my opinions and try to give some definitions about what all these magical things mean. And of course investors, when they get into real estate, particularly multi-units, residential income properties and as such, are always interested in certain metrics. So we'll talk about some of those metrics. One of the most famous, of course, is the cap rate, capitalization rate. And a cap rate is pretty straightforward. It's really nothing more than taking a look at what your expenses are and your net operating income against the sale price of the property. In places outside of California, cap rates are much, much higher. So people out, let's say in Arizona, or goodness gracious, go to Oklahoma or Tennessee, are looking at 10, 12% cap rates. That's what they really focus on when they want to buy a property. However, here in California, especially in LA County, Orange County, we're really lucky if we can get 5.5 to, boy, you're really pushing if you can get a 7% cap rate. You better jump on that. It just makes it a really, really good deal. But of course, let's follow up on what's important. It's not necessarily the cap rate itself. There are other measures, price per door, and we can go on and on and on about that. I think really what the investor needs to look at is this property in a good location? Are the upside rents year over year, as far as their potential increases, pretty strong, average or above average? What kind of tenants do they have? What sort of turnover do they have? Those kinds of things really make a difference in what you're going to do when you make an investment in multi-units. So we can explore some of those other factors a little bit later on. I'm going to take a short break, and I'll come back and talk to you.